The reason oil has fallen is a lot of the worries about oil leaving the market started to go away. Russian sanctions, they're real, they're happening, but the market is largely ignoring them. And I think it's a duration issue. The market is seeing it, but saying, you know what, it probably can't last very long, meaning the Russian barrels will come back in a short amount of time. The OPEC...
This assumes a ceasefire and a lifting of sanctions, is what you're saying.
Not necessarily.
Not necessarily, okay.
This is where I think the political world and the oil world are seeing things a little bit differently.
Talk to us, okay.
The oil world is seeing it as, you know what, there's a good chance the barrels can come back without a ceasefire. They can be disentangled, right? People will say, well, why would he give away the leverage? You know, those are fair points, but there are other constraints on President Trump, right? If you lose a lot of Russian barrels to the tune of 2 million barrels a day, and then you want to chase Iran for another million lower, you know, that is a lot of extra oil that has to be found elsewhere, and the price of oil could end up at 90 to 100. But also refining margins would go up on top of that, right? So, you know, our view is if you have a president who's dealing with potential inflation, a very tricky stock market, you know, housing is still not coming back in the U.S., and then you stick on top of that a really high price of oil.
That's not going to work, yeah.
Yeah, we think you run out of, like, degrees of freedom, right? Like, there's a constraint there. So that's where we're coming from.
All right.
And I think a lot of the oil market sees it that way.
So let me throw this at you, right? You're saying this could be disentangled or separated from what's happening geopolitically in terms of security, et cetera, right? But could there be sort of a meeting point in the sense that, you know, the proposal on the table for the ceasefire, Putin's intent, look, the land I grabbed, right, I want to keep that, right? No NATO membership for Ukraine and a whole bunch of other stuff, all these conditions, right? For Trump, could it be, you know, talking to Putin, he's going like, listen, Vlad, you remember the $300 billion that got seized from you after you attacked Ukraine? I'll tell you what, how about if we give that back to you, and in exchange, you start getting oil back out there? We allow you to do that. Does that make sense to you?
That makes a lot of sense.
Ah, okay, thank you.
Yeah. Yeah. So look, we're working backwards, right? From like, what are the main policy goals? And you know, I'm not an economist, I'm an oil guy, but we know a few things. And if you are doing a lot of things that are probably inflationary, you have to take the price of energy down. And it is the largest single category of U.S. consumption costs. You know, we would have thought it was food or something, but it's actually energy. So if you can take that down, you can make a big dent in inflation happening elsewhere in the economy.
If we are to then put some numbers on it, is $50 too aggressive on the downside? Does 60 look like the floor?
60 is a much better floor for the oil industry in the U.S. You know, they can survive at 50, but that would be kind of a no growth of production. And the return of capital and the return on capital would be really challenged at that level.
Let me ask you, if 60 is more realistic than 50, right? What about the price level we're at now? Brent's at around 70, 71, I think last I checked. Let's throw it the board and give you a real-time look at the pricing. In terms of cost of production and incentivizing U.S. producers to do more, right, does 71 do it, or is that still not good enough?
Oh, no, 71 does it.
Okay.
Yeah. We think the zone of indifference is, you know, kind of 65 to 75. They'll follow through with their current capital plans and growth. Around 65 TI, there's some discussions. At 60, you start tapping the brakes, and by the time you get to 50, you're at no growth, and you're struggling. It wouldn't be a healthy industry at 50.